What's up, guys? It's been a minute, but I'm back. Alibaba's reporting next week, and so let's dive into a little bit of an earnings preview. You're watching More Money? Let's get it. It is nice to see everyone. It's been a long time. I feel like I haven't done a video probably since the last winter, and now we're going into this winter. So it's been a while, and I'll do a separate video on sort of explaining my absence, but I just wanted to just pause and just say that I'm extremely grateful for all the messages that I've been getting over the past couple of months. I've been getting quite a few of them from the community here, just saying, where are you? Hope you're doing well, et cetera, et cetera. And I think as I don't consider myself a content creator at all. I just have a dude with a camera and a mic, and I just try to impart my research and try to help people learn how to model companies, etc. better. But I, as someone who's built this small community, it feels nice that my absence gets missed somewhat. Like it is heartening, or what's the word I'm looking for? Like it does warm my heart to get that from you guys. And so, I do apologize for being away, but, there was other things that I had to address, and, long story short, things have been going really, really well. And so, this is a very happy story. And, when we go into Alibaba and we go into the preview, it's very good to see that it's actually been a good news story for everyone. We definitely saw the stock come down from that 140 area early in the year, which made a lot of sense because, this is when we were going to the tariff issues. But as you can imagine, it's up 80% on the year. And in fact, earlier on, this thing got close to $200 per share. And so I'm sure a lot of you guys took profits around here, especially if you were buying in the early days where we were getting prices, I don't know, somewhere in like the $65, $70 per share. Let's look into it. You can see here that, we were definitely getting down into the $60, $70 per share area. And one thing that you guys might actually not be aware of is that I was actually getting mocked by other value investing or just investing YouTubers for a while. And I think what happens is that the minute your subscriber count passes like 10,000, people start making videos about you and like mocking you. And the one thing that I never wanted to do on this channel, you never saw me do it throughout all those years when it was happening, is I would never actually respond back to these people, because my whole thing was like, I'm right or I'm wrong based on my research and my math. And I always backed it up with these models. And these models are available to you guys. Obviously, it's behind the Patreon. I think it's like $4 or $5 a month paywall, but like it's available. And my reasoning and my logic is all right there. And if I'm right or wrong, I live or die by that sword. And that is okay. It's how I view these securities. And I put my own money where my mouth is. But it was very interesting that I got mocked for years on this. But my thought pattern has always been the stock will actually move away from the intrinsic value of the company for a certain time period. But over the long run, and I'm talking like 5, 10, 15, 20 years, over that time period, it will eventually go back to somewhat in line with the intrinsic value of the company. And I'm not saying that my intrinsic value calculation is the correct. Nobody's is. I would say that I probably have what I think, in my opinion, is an intrinsic value calculation good enough for me to make investment decisions on here. And, it actually worked out really well. It's been nice to be able to take those gains and recycle it into something else. And for those of you who have been a part of the journey, who've been speaking to me every month, because I've continued, despite not being on YouTube, I've actually been on the Patreon calls every month. And you guys have seen, I've been getting excited about, some things that you guys agreed with, some things that you guys didn't agree with. I definitely went pretty hard into the managed care insurers, and so it was nice to be able to recycle that capital, put it into some of those names, and continue driving returns. Now, as many of you already may be aware, Alibaba is going to announce earnings this week, and so I wanted to do a quick preview for you guys just to give you my thoughts of where the business is headed. And if the share price continues to come down, I will probably increase my positions, especially using like options type of investments to see if I can get that thing at a much lower price than even the market provides. Now, in order to understand where the company is going or what your expectations should be, I think it's a good idea to understand where they landed last quarter. So overall, total revenue was up 10%. I would say there is a lot of excitement over cloud and international, and we've been excited about cloud and international for a long time, but notice that despite cloud going up by 26 and international going up by 19, the company's overall revenues moves in tandem with the e-commerce group. And so most of your attention should be focused on the e-commerce group. This is absolutely the future. But we need to focus here. And here's where it gets a little bit challenging, right? And it's not all blue oceans for Alibaba. They are in a battle. They are fighting in the e-commerce space, which is the biggest part of their revenue model. And this here just puts into numbers what I mean. Look how large the e-commerce group is relative to international and relative to cloud, right? And so just keep that in mind, because the market's going to focus on this 26% number, but it's a much smaller figure. And the international, again, much smaller figure relative to e-commerce as a whole. And so this is why, the way e-commerce goes is how the revenue growth goes. And so here's where it gets a little bit challenging. So keep in mind, as much as the market is excited about Alibaba and as much as the share price is going up, they got some structural risks here, which we actually have been calling out for years. And this is actually one of the reasons why I reduced my position. So let me get into that. So I hope you guys can see this. I made this as big as possible. Now, Alibaba will say that they got a 25% year-over-year increase on their monthly active users on the Taobao app. They will also say that their number of 88 VIP members, which is basically Amazon Prime. Correct me if I'm wrong there, but my understanding is that 88 VIP is the effective equivalent of Amazon Prime. So their number of Prime members continue to increase by double digits, surpassing 53 million, which is incredible. But in this small little, four-word line here, this is what I was worried about. It's very clear that competition is forcing them to support their merchants. And so despite the headline increase in revenue, notice their EBITA or EBITA is actually declining by 21%. Now, this isn't a throw the company away or anything along those lines, because I'll show you in the next slide where Alibaba has been able to successfully at times invest in certain segments and it will drive down EBITDA, but it sets the company up for growth later on. And so I'm not saying that this is a forever problem, but I'm saying that it's something to really watch, because the predominant amount of cash flow, in fact, virtually all of the cash flow for the business comes from this segment. This segment supports the rest of the company. And so, part of the reduction in the EBITDA is the support for the merchants. The other part of it is due to the investment in Taobao instant commerce, which is one of the reasons why it led to a 25% increase in monthly active customers. Is they've been investing in that Taobao instant commerce business, but it comes at a cost. So pay attention to this. I wouldn't say that this is scary levels yet, but I would say that it's something to pay attention to, especially if it's still a material position in your portfolio. Now, with that said, international is actually an example of a place where I've been, calling out, not necessarily calling out, but highlighting the fact that, they've been growing revenues while the EBITDA hasn't been growing, because they've been supporting the merchants so much to get a stronghold in the international commerce space. But now notice that they've been focusing on efficiencies. But I think the bigger issue is that they've been getting increased contribution through AliExpress and through Trendyol, and now notice that their losses have narrowed significantly while simultaneously increasing revenues. And so one of the things that we want to look out for over, I would say, the next 1 year, 2 years, is in their base business, will they narrow the losses, or will the losses continue? Not necessarily losses, but will EBITDA continue to come down, or will it come back like it did with the International Business Group? Now, International Business Group is still not contributing anything, right? But my thoughts are that the International Business Group will start to contribute. And so this is where I worry about the main contributor not contributing, or contributing less and less over time. And so this is where Alibaba is still in a fight, is still in a big fight, and they need to ensure that profitability sustains itself in that segment. And I'm sure that they will. I'm sure I'm making a bigger deal of this than it really is. But if I'm not calling it out, then I would not be doing myself a service, because again, I'm still a shareholder here, and I still want to understand how the business is operating. Now, with cloud, the story is wonderful. It's growing super fast. It's very profitable, and they have significant investment opportunities to continue to grow this thing out. So AI related growth, they maintained triple digit growth year over year. And so, as we look into the next quarter, we want to see this continue. The other thing that we also want to see continue is, are they continuing to invest in the anticipation of customer growth and technology innovation? Now, one thing I worry about here is, with all of the investment going into AI, are there situations where we're over investing? I don't think Alibaba is investing material amount, obviously it's material, but not excessive amounts into their AI. I think they're doing it okay. I think they're doing it appropriately. I think there's a lot of examples in the industry where the investment has been somewhat excessive, but I might be wrong. I'm a late consumer into AI. I only really started using AI like 2 or 3 years ago. And so I just may not see what they're seeing. But the good thing is, profitability has not declined while the revenue continues to increase. And so that's really good. Cloud continues to contribute to adjusted EBITDA, and I really, really appreciate that. And it's really good as we continue to see this going forward. I would love to see the adjusted EBITDA as a percentage of revenue grow. And so that's something to pay attention to in the next quarter. Now, guys, this is a free cash flow business. And as you can see, in the last quarter, they actually went negative on the free cash flow. And the reason for the negative is because they spent so much on CapEx related to investments in the cloud business. So just pay attention to this. We'll see what this looks like on an annual basis as they release the next quarter's earnings, but just continue to pay attention to this. As we go negative on free cash flow, we just want to make sure that they're managing cash appropriately. I think one of the expectations is probably those special dividends are going to go away, and that's okay. But then the other item that you're going to have to pay attention to is, what is the return or the expected return on the investments that they're making in the cloud business? It might be early, way too early to tell. They are investing in anticipation of consumer or of market demand, so that makes it a little bit difficult. But I'm not saying that they're making a mistake. I think they're moving in the right direction, but just something to pay attention to. And so what does that mean overall? I mean, I would say that I probably have or at least the patrons that speak with me every month, they believe that I have a very conservative valuation. I've kind of just been bopping around between 160 and 180, I think. And the current share price at 150 is, approximating my share price as a percentage of my valuation. And so, as you can imagine, when this thing was going up to 180 and such, I just had the opportunity to recycle the capital in such a way where I could put it into things that made a little bit more sense, especially when some of the managed care guys took a real dive. And so it was very, very, very exciting to recycle a little bit of that. But I want to know what you guys think. Are you guys still shareholders of Alibaba? Have you guys taken profits? I know quite a few of you did double. And some of you guys were sending me screenshots, like emailing me screenshots. That's really cool to see. I would say that even if you're not doubling or whatever, I think the bigger issue is that you stayed firm on your valuations. You guys all have your own models, and you guys kind of saw what I was seeing, and so I was really happy to see that. I will say, just because Alibaba is a winner and we had so much conviction, there have been times where I had strong convictions on names that went down 90%, and so that's why portfolio diversification matters as well, and blah blah blah. You've heard all that from me, but I want to know what you guys think overall. I'm not perfect, but I want to know what you guys think on the valuation. Is this thing worth $160 per share? Or is it worth more? Are you guys still holders or are you guys sellers? Also, what did I miss in my preview analysis that you guys are looking forward to with the earnings as they come out? So let me know, guys. Also, it's really nice to be back. I'm going to try to be back more often or get on as much as I can. And so until then, guys, I'll see you later.